global Islamic financial assets are worth more than $1.3 trillion, following demand for sharia-compliant products. But based on a model of avoiding most forms of debt and derivatives, even the non-Islamic world is starting to take notice. With me now is Meziane Lasfer, Professor of Finance at Cass Business School and expert on sharia-compliance. Well, Meziane, it's said that Islamic finance is free from the products and loans that triggered the financial crisis, but it hasn't been immune. So how exposed is it to the same risks as traditional Western finance?
Islamic finance prohibits debt, and given that the financial crisis was created or was done by mainly debt financing, the Islamic finance normally shouldn't have any say in that. So Islamic finance says that any investment that you are going to do not expect any fixed interest. It is more participation in the investment that the company is doing. So if we look at the venture capitalists, and venture capitalist funding is pure Islamic finance, because they give you money, they give you equity, they participate in your company, and then when your company makes profit, they get their return. But if the company doesn't make profit, then they take the loss. They have engaged the capital. So they are taking a risk with you, rather than debt where the risk is transferred only to the company.
Well, critics do argue that Islamic finance is just traditional Western finance dressed up to look more moralistic, because at the end of the day, profits end up in the same place. What's your take on this?
We need to be very careful as to how those financial products that are more conventional, in particular debt, can be turned just by twisting it into an Islamic finance product. So, for example, we need to look closely at the design of the sukuks. Sukuks, they say that there are Islamic debt financing, but we need really to look closely at how they are structured to see whether they are consistent with the Islamic finance principle.
Well, the sukuk isn't really without its controversy, because very conventional, very traditional scholars don't actually recognize it. So why is this?
We are faced in a very difficult situation. In theory, we have Islamic finance that tells us that we shouldn't have financing that is based on debt. In practice, it will be too constraining for companies to really make them finance only with equity. So you still need some debt financing, but in order to please those scholars, you need really to go probably to the extreme to say no interest at all. So probably issue what we might call zero coupon bond, i.e. you don't pay interest during the life of that bond. So at the end of the bond, you will pay the interest as well as the repayment of the principal of the bond. But then the problem is, how do we calculate the excess that you will give on that bond? So suppose that I issue you a bond for £1,000, and then I will tell you in 5 years' time, I'm going to give you 1,200. But how am I going to compute those £200 that I'm going to give you extra? Is it really interest? Is it participation? Is it the time value of money? Is it the inflation, etc.? So all those really factors that contribute to this excess money that I'm going to give you are not straightforward, they are controversial. So in other words, from the Sharia scholars, I can understand their point. It's just probably a matter of explaining to them where this money is coming from. As long as it is not fixed, as long as it is not form of interest, a kind of shadow interest, if we can put it in between quotes, then it should be fine.
Surely Islamic finance isn't always consistent, because it's open to the interpretation of Sharia boards.
The big problem is that Islamic finance is relatively new. Even in the conventional, it's not clear as to how should companies finance themselves, or how should banks behave, or how should the derivatives be traded. So from Islamic finance that was created only recently, you would expect really lots of controversies. And in fact, the fact that it came up, as you mentioned earlier, the fact that we had this big increase in the Islamic finance products means that this development has already lots of problems were taken out from it.
How much would you say Islamic finance then is replacing traditional Western finance?
Yeah, Islamic finance is not substitute, it is complementary. More importantly is that it offers liquidity. Liquidity is very critical in financial markets. So if you don't have enough financial securities that are trading, like equity, debt, convertibles, etc., there will be some excess in the prices, because there will be lots of demand, yet the products that you are offering is small.
The UK will issue a £200 million sukuk. So how prominent do you see Islamic finance in the future?
If you have got all this money that is coming up from the government in the form of Islamic finance, I think that will be an advert for the London market and also the investors to say, oh yes, if the government is issuing all these sukuks, therefore it is a product that we really need to take seriously, that we need to invest in it because it has got also already the backing of the government in the UK.
Meziane, thank you.
My pleasure.